Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It's February 22nd. This will be our chart listing for the day, and this will wrap it up for the week. No chart lessons on Friday, so yeah, this will be it till Monday. As far as I know, there's no holiday Monday. I forgot about mentioning that last week, so it seems like it's been a quick week, but we didn't trade on Monday. So at any rate, it turned out to be a pretty decent day. It's very similar to yesterday. We had a couple of legs up and then we reversed and we had a couple of legs down and it's bouncing late in the afternoon. So it's very similar to yesterday. You had to be a little patient. It was, almost 9 o'clock before you really got a really good setup on a trade. Um, but anyway, let's back out. We'll talk about these trades. I'm going to back out here where you can see it a little better and we'll go from there. Um, Yeah, you had to be a little patient. 7 o'clock hour came right in here somewhere on this little correction here, and then prices bounced. And of course, get your measurement and look for a possible measured move. And you can see we got that to the tick, but better than that, if you just drew your trend line and drug it to the top, that's exactly where it turned down. And you could see a midline in here. You didn't have a whole lot of evidence on the midline yet, but generally it's going to be on these previous swings like you can see right here. And so that kind of helps you to know the right place. And if you don't get your trend lines right, you're going to be off. And this is a skill. It takes time. Um, and you can be close and not be exact. I mean, people send me their chart and it's not exactly the same thing I have, but it's close enough and they still get the same outcome. And that's good enough. But if you're off considerably, you're going to have trouble. So, uh, one lady sent me her chart, and somehow I couldn't get mine to really look that way. Somehow she had hers drawn up through here, maybe something like that. But see, even there, I get the break, so maybe it was a little lower than that. Maybe she drew it like that. But see, even there, that still doesn't fit. You get a little push. But anyway, she had hers a little flatter. So she didn't see a break of the channel. And when it suddenly reversed, it threw her off. But let me talk about that regardless. Even if you don't get the trend line right, or even if it does, you do have it right. If you suddenly get a trend racing in the other direction like this, don't worry about the fact that you didn't get a break and a retest. Nothing is 100% in trading. We've got it down to where 90% of the time it's going to play out like we expect it to, but nothing's 100%. And so if you're sitting here waiting on this to make a retest and you're just watching this trend go without you, then you're in trouble. And I know what a lot of you do. You'll sit here and watch it and watch it and watch it, and then all of a sudden you say, well, I should be trading the other way, and then you try to get short in here and you get burned, and then it goes exactly where you thought it was going to go. So, you've got to draw your shorter term stuff in here. You got to keep up with what's going on. You can't get flustered. You can't trade off what you're thinking should happen, trade off what you're seeing. And if you look coming down here, just an example, there's your first leg. And then there's your second leg. So that would be your target. So once prices get down here, unless you get another great setup off the trend line, don't be thinking short anymore. You got to be thinking, let it correct, and then you get another correction down. And so just keep that in mind. I mean, but what'll happen is people just get flustered, and then they start making mistake after mistake, and then before you know it, the whole day's shot, and you've done nothing but lose all day. And so, but that's why we sim trade. Never trade live. If you haven't proven that you can make money consistently long term on the simulator, don't waste your money trying to trade live. Don't be what we call a donator, because you're just going to donate to the other traders, and you don't want to be a donator. You want to be a collector. You want to take money and put it in your little uh, pocketbook. You don't want to be donating it out to everybody else's pocketbook. So keep that in mind. But anyway, let's talk about the trades. We'll wrap up the week and uh, come back and do it next week. But like I said, we're 7 o'clock hour right in here. Look for this measured leg up. So if we get a measured leg, that's where prices are heading, and we pretty much got that one to the tick. So that's a perfect measured move. But notice when we started going higher, I drew that trend line off the first couple of bars. It caught that first swing or two right there. And look at it. You can tell that's a valid trend line. It's walking up it. Um, and we really got a confirmation right here. Notice that low. Then you get a first entry, a second entry, short, and it fails and it goes higher. The only reason this is not blue, it's a good bit away from the EMA. There's a lot of overlap right there with a doji or two in there. It's going long right into the highs, although it is a little bit of a breakout pullback long, and it is off the key entry point. So this one is like borderline. But if you're wanting to be aggressive and it's a strong trend, and particularly if we're going to get a measured leg up, and even if we're not going to get a measured leg, if we're just going to the the equal distance to the other side of the channel, which it's looking like that because we done got way above what looked like it might have been the upper channel and kept going. So of course, if you don't have a lot of experience, you probably wouldn't have found that midline, but you could have easily found this trend line right here. That's not that difficult to find right up through there. And you might have had it at a little different angle, but that's okay. Once you drag it up to this line and it turns down right here, you kind of know the angle. And so, or if you didn't have it by here, just draw it off those two swings and drop it down and see how it fits in there. I do that a lot. So, but if even without it, you had these shorter term ones, and that's really all you need is the short term ones. And even if you can't find the bigger ones, these short term ones are really generally pretty easy. They're just right off the trend bars working up or the first swing. And so anyway, this one is borderline. It's a, this is a fast market. I would have preferred it to be back closer to the EMA. I would prefer more room before you get out. And it is a failed second entry short because there's a new low right there. First entry, second entry. But like I said, it's also a breakout pullback. It's a confirmation. It's the third touch of that trend line. There's your second touch right here that sets it up, and that's your third touch. And everything's still closing above it all the way up through here. Even that last bar right there really closed either right on it or above it, depending on, I could be off just a hair and it looked like it was below it. But you see that little gap there? It actually gapped over it. That tells you, you'll see that a lot. That tells you your line. It did back up and fill the little gap, but notice it closed there and opened there, and there was no overlap. So you'll see that a lot. It'll gap over those lines. I don't know why that happens, but it does. So, when you see that, it generally is a confirmation that in your trend lines right there, or some kind of support resistances right there, midline, EMA. When prices do that, it's a nice confirmation that hey, your line is correct. Your trend line, your EMA or whatever, your trend channel line's in the right place. So keep that in mind. So you might enter there. Like I said, it's a little aggressive, but man, look at it take off. Then you get the break of this trend line. You move to a new high and it turns down. This one could easily be green. Generally, you want to wait on your lower high, but look how long we've been away from the EMA since 7 o'clock, and it's 8:30. It's turning down right off of the top of that swing where you would have probably drawn that line to. You got two equal distance. You got a two-tiered equal distance channel here between these two, between the midline. And so there's a lot of reasons. Look how bad, and that actually went higher and turned and went out the other side, down out the other side of that bar. We're coming back to the EMA most likely. There's always a chance it could push up one more time, but bar that bearish with the way it worked out, they probably trapped some longs. And if it goes low, if it does break lower in that bar, it's probably going to come back to the EMA. And once all these people that got long realize, hey, we got a pretty big correction coming, they all start running for the exit. And that's why it suddenly shoots down like that. And then notice how we got another one. Once it got below that EMA and shot down again, it scares all these weak longs out and they run for the border. And just by the time they all get through exiting, then look what happens. It starts going higher again. And I would measure from this point right here, I would measure those two legs as one move. And if it went higher than that, I would come back and measure from the very low. But that would be my first measurement. And you can see we didn't quite get there. And that's telling you something. When you don't quite get there, it's telling you that the market's probably weaker than it should be. And, you know, we're probably going to reverse here at some point. And you can actually get, you know, there's more clues than that, because look how we were working up in this two-tiered, and suddenly now we get a break, and you can kind of find another little short-term channel in here, the brown line, that's working up. And notice that we didn't get a break of it in a new high, but on the main channel we got a break, and there's one leg up, and then there's another leg up, and then there's actually one more push up, because this channel's come into play, and so people are following it. But look how we broke lower here. Yeah, sure, you're still thinking, hey, maybe we will come back and test that high. But, you know, by the time it's made this lower high and pushed, and it's already that far below the EMA, and you got that many higher highs and higher lows, don't be looking for any longs, you know, right away. Wait till this thing's, you know, wait till this downtrend plays out. And you don't know that it's going to take off like this. You just got a shorter term one here. But it just keeps going. And this one comes into play right here. You know, you touch it, you confirm it a couple of times, and off it goes. And look where your big moves come from. There's your big move right off the trend line. There's your big move right off the trend line. Same thing coming up. Where are your big moves? They're off these key entry points. These aren't really big moves, but they're big moves considering what's going on here. Look where this big move started, all the way up, right off a key entry point that had been proven multiple times up through there. Look where this big move came from, right off this shorter term trend line. That's where your big moves are going to come from, so be aware of that. Look where this big move down came from, off the upper side of the trend channel. This one's just kind of off to the races here. It just kind of drops. You never even get a real correction, anything that can really correct. But every time it comes back to that short-term trend line, boom, it's down until you finally get a break, push to a new low, and where does it bounce? Off that original trend line, and off it goes. And really, you could argue for this one to be blue, but because this is really your signal bar and it's bearish, and then this one's an inside and it's kind of neutral. You had to be careful with this one. So, but it is off that key entry point. It's a relatively small bar. We hadn't got a lot of those lately. We're away from the EMA. It's right off the trend line. You know, if you want to be a little aggressive and risk that, that's probably a good place to enter, because you might catch a low and it may take off. Unfortunately, it doesn't, but it's an easy scalp. I mean, that scalp was done and over in just a couple of seconds. So. And of course you got a new low, and then you get a first entry short, second entry short. And where does it bounce again? With a nice bullish type reversal bar right off that key entry point. Go long right there. And look at how that one took off. That's the biggest move we've had in a bit to the upside. And then you get a little two-legged correction right there. Too bearish to attempt a second entry long there. It's a first break of the trend line. You do have a close outside the new low, but I'd wait on a higher low, which comes here. And again, it's kind of a neutral bar. So let's see if we get the reversal pattern with the failed second entry short. And there it comes right there. So, and that's, even though that's got a tick or so of red there, that's still a much more bullish than neutral or bearish bar. So I like going long there. Another quick, easy move. And then you get two legs back down. And I always draw these trend lines just in case. I originally drew it here, but that really fits the other one. So until we really got one way over, you really didn't have a need to try to draw another one, to be honest. But anytime you start to get these where they start to fold over, just kind of draw them. And the first one two you had were here and here. And so you draw it there. And I always start at the low and I use the closes from there on. And if you'd have drawn that right off that low in those closes, look what happens. It comes back, gives you those nice setups. And anybody could draw that. That's typically how we draw them. But anyway, we had a failed second entry short there, go long. Then we're coming back. We get a close outside, and there's a couple of legs down. And notice where we bounce. We bounce off that trend line once. We bounce off of it twice. I'd wait on a second entry here. If you'd have went long there, it would have worked. But that's just a first entry, and we've already had a break and a couple legs up. So you better play a little closer to the vest here when you got a second entry right here, or lower high. I like another bounce. We tested that line twice. I like going long there, and look at it go. Off it goes again. And then it pulls back. And you only got a first entry here, but now you've got some confirmation of this trend line. This is just another big bullish bar. It's a really big bar, so and you can't really enter it by being see, that's a little over, that's 3.5 point range on that bar. So you know, you may or may not want to risk that. I marked it because there is a swing low right there, and look, it's a first entry short, there's a second entry short, but this is too high. But when it comes back down and bounces right off of that, there's actually a little congestion, little range right across there, and it's like a little failed break out of that range. You can look at that like that. There's actually a failed break out the top, but the trend is up, so you got to be careful going short. You're not very far away from the EMA. It could just come back right in here and hit and bounce and go up, but it comes down. And so I like that. This one's close to being green because it's a first entry, but I just explained why. You know, it's a continuation of what looks like a failed second entry short, and a nice bullish bar right off the key entry point after we bounce there several times. And look how it goes again, takes off. And then we finally get a lower high here. We got that new high right there's a little congestion. You get a failed break, comes back, makes a lower high, and this is a pullback first entry, pullback second entry. And you might have considered entering here. If you draw your little short-term trend line, you do get a close outside and move to a new low, but that's such a neutral bar. I mean, it really closed one tick higher. If it closed one tick lower, it'd been dead center, a perfect doji. So I'm not crazy about it. We'll mark it, but it's not a very good setup. And then we push up and make a lower high, and you can treat that as a failed second. It would have got its 4 ticks, but it's still close enough. I explained that to somebody the other day. The fact that we didn't go higher here tells you we're probably going to get a second leg down back to at least the trend line, and who knows? We should be getting close to, you know, correcting here because we've had a close outside the big two-tiered channel, and if you measure, I'd call that your first leg. There's a bunch of moves in there, but that's your first leg up. Get the measurement a little closer here. I'm not quite right. And then your second leg starts right there. So, and you can see that's really close. That's right where we find resistance, and before we turn down, we actually went a little bit higher, but that's okay. It's still close enough, and that kind of hints to you that this would be a place to look for a reversal. So I'm more apt to go short there than I am long. But if you want to be aggressive, there's a second entry long there, and there is a close outside that little short-term trend line there and a new low. So you might consider that. But notice how you make that lower high. Look how it shoots right through the EMA. You do get a little resistance right there, or a little support right there, but it pushes on through, pulls back, goes lower, comes back and gives you a lower high and gives you that failed second. There's really a failed second entry long here because that's this is really, you could consider that one move in a bigger picture, first entry, pullback, second entry. But this is a double top, and and this is the first lower high. So I would start from here. There's your first entry long, pullback, second entry long. It fails. Look how bearish that bar is. Again, it's a big one, but there's nothing we can do about that. Go short right there. Or let it break lower and drop a lemon order in. You might have got filled a couple of ticks back in that one. But that's, you know, that's a key entry point, and it confirms that trend line and it takes off. So now it pulls back, you get a break of this short term one coming down, and then you're moving up, you get a break of that one. Notice how they both bounce right off that trend line, but that's a lower high. But that bar's too bullish on that lower high, but it tries to go higher again, gives you that little trap, and it actually goes out the top and turns and goes right out the bottom. I'd go short right there, again off the key entry point, and look at it go. And then you actually come back to it one more time, get another bearish bar. And even though this one a little lower, let me show you this. This is what I was talking about earlier. Close is close enough. That's one leg back, correction, that's a two-legged correction back to the EMA. Just because it went a tick or so lower there, it still looks like two legs back to the EMA. So it's probably going to work like a second entry or two legs back to the EMA. And especially with everything still closing, that bearish bar, I like going short right there. You might wait on the lower high, but you don't really get one. It rockets down, it comes back, gives you a lower high right here. That bar's too neutral. That one's relatively negative. But you got to go short right into that low. So before I would go short here, you might let it break lower from this bar and drop you a limit order back a couple of ticks, or maybe where this one would have filled, and it would have come back and filled you and then went lower. You might have risked that one, but even then, we've been going down for a good bit, and of course, take your first move and then look for your second leg right there. And that would have maybe given you a little more reason to say, hey, we've got a little more down room left here. And so, you know, if you see that, you may risk it. And then I would also measure, really we started down right there. I would measure that leg and then look for a measured leg there, and you can see, and we actually went a little further. So if you back up and start from the very high to the very low, that would be your next possibility. And you can see we got to that one within a tick. So, but generally I'll just take the more conservative one, and I'll exit a tick or two in front of that, and that generally gets you pretty close. So unless you just keeps working lower and giving you really, you know, unless the trend really still looks strong. But you can see we're starting to, you can see the buying starting to come in now each time we push a little lower, and then finally the buying kind of overtakes and goes higher. So, but notice what happens here. You get a close outside, move to a new high, you get a lower high. So I like going short there, but it fails real quickly and tries to go higher, fails again, tries to go higher. I like going long right there. And off it goes up to the upside again. And this one is really, I don't have my little short-term trend line on here. This is really kind of, again, sideways stuff here. Let me draw this for you. Come on, line. Okay, you can see that right there. And you've got some stuff down here on the low side. So it's looking really sideways. So you might treat that like a failed break higher. Look how far away we are from the EMA. It's a second entry short too. Look at that low. First entry, second entry, and it's a relatively bearish bar, long way away from the EMA. And you might even draw your little short term trend line up there, and you can see you get a close outside a new high, and boom, off it goes. But the main thing is you haven't had a correction off of this yet, so you're still looking for a possible short. The only reason I like this one because it's a double test, and it's, you know, two tries to go lower that failed, and so it's probably going to be good at least for a scalp. And the thing might just reverse. You never know. It doesn't end up doing that, but still, that's a nice move there that you could have got a couple points out of and easily got a scalp. And notice that two-legged correction there. A lot of times that's the middle of the pattern, and if you get lucky and catch one, which you could still be in this if you caught that. And if you measure that first leg and then come over here, yesterday we didn't quite make it. But you can see today we came up a little bit short, but that's real close. So that's within a point or two, a couple of points. So that would have given you a nice target. So if you caught that, you could ride this all the way down. I probably would have exited right in here somewhere when it starts, once you get the break and a couple of legs down to a new low, because it might just reverse from right there. But it does. It keeps pushing down, trying to make that measured move. And so, yeah, it was a little slow getting started today, but once it did, there were some nice entries here. Again, just remember, and this is based on the email I got from the one lady today. If the market's not doing what you expect, there's a possibility you've misread it. There's a possibility that it's not going to do what you expect, even though you didn't misread it. And so don't go with what you're expecting to happen. Go with what the market is actually showing you. So once we start going down here and we're making lower highs and lower lows and the EMA's pointing down and everything's below it, don't be thinking about, hey, I'm still looking for a retest of the high. Start looking for shorts because you got a trend working down. And same thing, if you're working down here and suddenly it starts going up and it keeps making higher highs and higher lows like it's doing up through here, quit looking for shorts and start going long. Don't argue with the market because we misread it. The market does things we don't expect it to do. Nothing is 100%. Our rules will work 90% of the time plus, but they don't work all the time. And if they did, we could just write a computer program to trade it for us, and we'd never have much. We just sit here and make millions all day letting the computer do the trading. But because the market is unpredictable and does things unexpected, you just got to follow the price action and go with it. And most of the time, this short-term trend line, you get a move up, a close outside, and two nice legs up to a new high. This one's working up, you get a close outside, a move to a new high. This one's working down, you get a close outside, move to a new low. This one right here, you finally get a close outside the big two-tiered one, and you get several swings up to a new high, and it reverses. The only one was this kind of brown one here. It never really played out because it just suddenly turned and went down. And maybe it's not really, I'm sure that it was playing off the main two-tiered channel, but you can't argue with those lines. They're fitting and they're working and they're holding prices. So you got to trade it, but you don't get a break in a new high here. It just reverses. But notice what happens on this one coming down. You get a break. You get a two-legged correction, and then it moves to a new low, and now it's reversed. It played out like you would expect it to. And if you draw this one, you can see that short-term trend line working down those closes. Let me make it a little bigger. You can see it working down those closes. You get a close outside, two pushes lower, and it reverses. Got that one working up. You get a close outside, two pushes up to a new high, it reverses. You can do the same thing coming back down. Close outside, push to a new low, it reverses. Now that one it trades up, but it's two attempts to go higher that really make, and then it reverses. That one would have been hard to read right there. You would have just probably skipped that one. This would have been one of those big ones that moves, and you probably let it go without you because it just didn't play out right. But notice this one, you get a close outside it, and it's only by one tick, but it gets a new low, and look at it go. So anyway, nothing's 100% is basically what I'm trying to get at. So, but anyway, I'm going to wrap it up. Hope you had a good week. We'll be back again to do it again starting Monday. But I'm done for the week. Hope you have a great weekend. We'll see you Monday. This is Mac. with priceactiontrading system.com, and we'll see you next time.